Yeah, good evening. This is Stevie, and I'm the founder of Prosperon Wealth Management. Today, I wanted to talk a little bit about women empowerment and outsourcing. Now, you might wonder what that's got to do with mutual funds and investing. So, I think the basic strength of a woman comes from her financial portfolio. That's my belief. It allows them to be more confident, have higher self-esteem, and generally be very relaxed in all their relationships. A lot of women of late that I've spoken to as prospective clients have told me that they've outsourced their portfolio to a male member, like a father, a brother, a husband. Oftentimes I found that they're not trained financial advisors. They might be, for lack of a better profession, chartered accountant, which in itself is a very hard profession, has very, very many competent people, but they're not trained in the subtle nuances of mutual funds, investing, compounding, asset allocation, risk appetite appraisal. I find that it's akin to telling a person with a truck driver's commercial lorry license to get into an aircraft and fly it. So while, with all due respect to all the wonderful male members of your families who must be accomplished professionals in their own right, my sincere request to you is get the right person for the right job. Again, advice in financial planning is gender agnostic, but you got to get someone who's skilled at this, who understands your financial goals and objectives, who's able to do a risk appetite appraisal, to understand your attitude towards volatility that the market inherently brings with it, and then to plan it out in such a way that you have the best mutual funds. Whether you are, you've come into some money and you want to do a lump sum investment via a systematic transfer plan from a liquid fund to a destination equity fund, or you are generating monthly surpluses after taxes and expenses as a successful professional. Sorry for the jargon. But there's no better way to explain this. You absolutely must find 4 or 5 financial advisors, speak to them, understand their experience, how passionate are they about mutual funds, do they have any skin in the game, that is, do they put their own money in the same funds that they recommend to the client, and make a choice. Don't make it a complicated exercise. Just talk to 2, 3, 4 people, and whoever you feel comfortable with, who you think you can trust, who has skin in the game, who has empathy for your financial goals and objectives and achieving them in the medium to long term, pick them. And as I always say, start where you are. So over-analysis leads to paralysis. So just start, but take command. Listen to financial planning videos. Read if you can. Because at the end of the day, it's your money. Your advisor may have the best intentions, but as Ronald Reagan said to Mikhail Gorbachev, when the US and the USSR started bringing down the Iron Curtain and the nuclear stockpiles were reduced, trust but verify. So the case in financial planning, trust but verify. So to cut a long story short, and due apologies for my jargon, which I'm happy to explain if you ever want to reach out to me. please select a professional financial planner and then learn about financial planning and know what is being recommended, maybe cross-check it with someone else, and then invest. The most important thing is start where you are, because mutual funds give excellent returns between 10, 12, and 15% in equity over the long term, only and only if you start and you give it 5, 10, 15, 20 years. So again, ladies, don't treat your funds as any less precious than the men. Try to avoid more than necessary investment in physical gold or bank FDs, and try to go across to the great Indian macro and micro growth story and take part in it and benefit from it, and start now. So thank you very much, and have a great evening and take care. Bye-bye.